Welcome to another video. If you're new to the channel, I'm a top author on the TRADINGVIEW platform as well as running an educational company and swing trading full-time with my students. In this video, we will be taking CHF JPY. We will be speaking about the position that we took with students this morning, and we will also speak about what we can expect in the future for CHF JPY and how you can be approaching it if you miss the opportunity to capitalize on it this morning. So without further ado, I will invite you to go and check out this video, no matter if you're watching it in 3 months or today, because it will always be educational. So make sure you watch it until the end because there is a lot of value to be taken from it as usual, and I will see you in the video. Okay, so we just closed one of the fastest swing trades that probably I ever took. Probably the second fast one that I ever took here on CHF JPY with students. So what we will be doing, I will be going over the position. So all the analysis that we had made, and obviously I had also shared the analysis on TradingView if you guys are following me for this short to the downside. So I will be giving you the analysis that we had and what we can expect next for CHF JPY if you didn't capitalize on this opportunity for the next opportunity that we can capitalize on. So what was the situation when we took the trade on CHF JPY? So the market was around this area here, right? The market was around this area here, and what was the situation? So the first time that we spoke about this pair on TradingView, the market was around this area, and we said what? We want to see the market make a push to the upside. Now, why did we want to see the first push to the upside? We wanted to see it because the market had clearly created this M formation, and after an M formation, what do you expect? You expect the market to make a push to the upside to retest the neckline. After a retest of the neckline, what do you expect? You expect the market to make a push to the downside, right? For the creation of a lower low. That is what you expect from the market. Simple pattern, M formation, retracement to the neckline, and then what? Continuation to the downside for the completion of the impulse correction and impulse to the downside. Plus, what you also had was obviously by taking your Fibonacci from the high to the low, you had a very interesting thing. Now, many people probably always ignore this and don't realize that the market loves to move in steps when it comes to Fibonacci levels. Look at what was happening here. The market had tested the 78.6 and tested the 61.8, next step 50% and melt to the downside, right? And what do I mean by this? So if the market, let's say, makes an impulse from a high to a low, okay, from this high here, the market makes an impulse to the downside and then starts a retracement. It hits first the 78.6, moves down 61.8, moves down 50%, moves down many times. It doesn't test the 382 and then just continues to the downside. That is something that you will see over and over again, specifically if the market is consolidating, like in this case. It will consolidate, but the highs will be exactly testing those levels. Now, what was the situation from a COT perspective? Now, from a COT perspective, basically what hedge funds were doing, what is their positioning in the market? So what we could see from a CHF perspective is that banks were basically the net positions were decreasing on CHF. What does it mean? It means that they're adding more shorts than longs. In this specific case, what was happening is that they were closing more longs than shorts because they weren't adding the shorts. But with the previous reports, we can see that they had opened quite a lot of shorts, considering that all the strength that we had seen in the past on CHF was all given by shorts closing. Look here, minus 3K, minus 4K, minus 3K, 1.7, minus 1.3. All shorts closing, and then they started to build up some short positions. And then what happened? What happened is they again closed a little bit of shorts, but nothing in comparison to what they had opened. And when it comes to the longs, they had closed a massive amount of longs. So we could expect some CHF weakness. And going to JPY. So we already spoke about the fact that this report here was clearly manipulated. We clearly seen that they just made one candle to the upside, reported the position. The next candle, we can clearly see that they closed the position. So we already knew the exact moment the report came out that they had manipulated it. And with the last report, in fact, what we can see is that they closed all the positions that they had opened just to manipulate the market. And we can't see the position building, but we can see it in the chart. As soon as after the report came out, they were already accumulating the long positions, clearly because we had all the uncertainty that there is at the moment around the world for obviously the virus and everything that there is around it. So it was pretty clear that on CHF JPY, weak CHF, very strong JPY, push to the downside, right? It's pretty clear. So we wanted to see the market make a push down. We knew that the market was retesting this level, tapping the Fibonacci levels one by one, And what was going on from a weekly perspective? On the weekly time frame, we already knew that the market had failed to break the previous high. We have a high here, the market failed to break the previous high, and we could expect a push to the downside. On the monthly time frame, what was the situation? I want to speak about it because it's important for what we can expect next. So on the weekly time frame, what was the situation? We had a market that clearly had created a W formation, right? Down, up, clear W formation. What do you want to see? You want to see the market make a push to the downside. The market is expected to make a push to the downside to the neckline, which in this case is here. Now, as you know, obviously keep in mind, this is something that we will go back to when we will speak about what can happen next. Now, when it comes to the entry on the 4 hour, obviously there are many things I can't share when it comes to the analysis and entry, because obviously there are clear rules that we have to follow with students and I can't be sharing them. Also, when it comes to the direction, there are obviously some things that I can't share. All the rules for entry, I can't share them. But our rules were satisfied after the market obviously gapped below and retested the entry zone. Now, that is the simple fact that I can tell you, okay? The market had gapped to the downside, retested the area, and obviously there is where you can enter. But it's very, very important to say this. There are many other conditions that had to be satisfied. Otherwise, we would have not been looking for the short. You can't just be trading gap closes. So why did we take profit exactly here? Now, obviously, if you were protecting your stop loss in this way, the simple Fibonacci from the high to the low, you would not get a 1, 2, 3 risk to reward to here. You could expect a big push to the downside considering all the fundamentals that we had around it. So we could definitely be targeting a minus 1.618 for the second possible target to the downside, giving us a pretty massive risk to reward for a push to the downside. And as you know, risk to reward is very, very important. It's all you need to know when you're trading, because if you have a massive risk to reward, at least 1, 2, 3, you can be right 3 times out of 10 and you're still making money. So even with a terrible win rate, you will still make money consistently in the market. So let's speak about what we can expect next. Just a quick reminder, make sure you comment below and you let me know which pair or which topic you would like me to cover in the next video. So going to the real-time chart, what is the situation now? From a monthly perspective, as I said, basically, I want to share with you what is going on from a monthly point of view. Now, this monthly candle is far from closing, yet we perfectly know that. And what we know that we have structure at this level, right? We clearly know it. That is the neckline of the W formation, and the market is currently below this area. However, this monthly candle, as we just said, is not closed yet. So the market can easily go and close back above that zone. However, to do that, we need to see a retracement, right? So we already know it from a monthly perspective. We can expect some sort of retracement here on CHF JPY after an impulse, and that is something that goes on for all impulses. The market just doesn't go straight down or straight up in one direction. There are always waves, no matter which time frame. There are always waves in the market. And if we go down on the weekly chart, what is the situation now? Here on the weekly, again, we do have some support here, right? We all know it. We have the support that comes from this previous resistance, now turn support, and we can expect a reaction to this area. Now, if we go down on the daily time frame, what is the situation now? Here on the daily, we've already seen it. The market created a very nice impulse to the downside. After an impulse, what do you expect? You expect a retracement, right? Now, at the moment, as you know, the situation on the 4 hour time frame is everything is pushing to the downside, right? There is nothing that is showing any kind of bullishness. So can you be looking for a retracement? Obviously not. Okay, you have to wait for the market to show you something. Trading is reactive, not predictive. You can't predict the market. You have to react to what the market is showing you in order to position yourself with the best probabilities and risk to reward. So where will be the best probabilities in this case? Well, we know one thing for sure, right? We know that here we have some very strong structure, very, very strong support, support, support. All that support will be turn resistance at this area if the market will make a retracement back to it. Plus, you will have a nice confluence of a Fibonacci level, right? We will take the Fibonacci from the high to the low. And if the market will start a retracement from here, what we will have a 61.8 retracement lining up perfectly with this zone exactly here. So what we will have a nice confluence for a possible short position. So what we will be doing with students, first of all, we will be waiting for the market to show a retracement. Doesn't matter when the market will start a retracement or if the market will start a retracement. The point is that we only take positions if all our rules are satisfied. So first, we need to see a retracement. If the market will show a retracement on CHF JPY, then what we will be doing? We will be monitoring price action on the 4-hour time frame inside of this confluence area for another short position if on the 4-hour time frame we will see our rules satisfied. It's very important that we see our rules satisfied on the 4 hours, because if the market reaches this area and on the 4-hour time frame we just continue to see the market create higher highs and just pushing to the upside, then the market will break the area to the upside and we have to adjust to the new analysis. Because keep in mind, everything is always, you always have to be adaptive in the market. So if the market breaks the structure to the upside, what you have to do? You have to wait for the retracement, and then you have to be looking for a long position for the completion of this inverted head and shoulders and this impulse correction and impulse pattern to the upside. So always, always, always be reactive in the market and not predictive. So what I suggest you to do, to be monitoring price action if the market will make a retracement with the rules of your own strategy. If it is tested, okay, you need to have a tested strategy. If it is tested, I suggest you're monitoring price action inside of this area for a possible short position if your rules are satisfied. If you enjoyed the video, make sure you smash the like button and comment below. It really does support the creation of more free education and analysis for all of you, as well as going and checking out the mentorship program by clicking on the link below. It's a very complete program. You first get all the rules of my strategies and then you trade them live with me. Each and every day I give you a new daily market breakdown showing you exactly which pairs are satisfying the rules for entry, where is the entry, where is the stop, where is the take profit, as well as answering every question that you have each and every day in video format, so that everything will be always clear about the strategies and you can become a consistent trader with my strategies. So without further ado, I will invite you to go and check it out, or go and check out the next video.